Now let us look at the rules for the debiting and crediting an account. As we have seen previously, there are certain rules and the golden rules of accountancy that we have to follow for posting different type of transaction into the books of accounts. There are certain type of rules that are related to for the debit and credit. Let us see one by one with the help of an example so that it would be much more clear to you. So first of all, we have the account of assets. As we have seen that any increase in the asset is recorded on the left side or the debit side of the account, and any decrease in the asset is recorded on the right side or the credit side of the account. So whenever your asset is increasing, it will be recorded on the debit side of the T account, and whenever your asset is decreasing, it will be recorded on the credit side of the T account. For example, we have purchased the furniture for rupees 10,000 cash. Now here in this example, as we are purchasing the furniture with 10,000 cash, furniture is our asset and cash is also our asset. As we are purchasing the furniture is increasing, and furniture is coming to us as we are purchasing it. So the furniture will be increasing. So any increase in the asset will be recorded on the debit side of the T account. And as we are getting that furniture through cash, so our asset cash is basically being decreasing, and any decrease in the asset will be recorded on the on the right side of the T accounts, which is basically the credit side. So here we basically make two type of T accounts. One T account we will make for the furniture, another T account we will make for the cash. So first T account that we make for the furniture account, we will write debit credit, and in the center we will write the title of the account, which is the furniture account. So we will debit over furniture account by 10,000 because we have purchased the furniture for rupees 10,000. Our asset is being increasing, so we will debit over furniture account. And other T account will be make for the cash account. We will write debit credit, in the center we will write the title of the account, which is the cash account. So here our cash account will be decreasing by 10,000 because asset is being decreasing, it is recorded on the credit side of the account. So this shows that furniture account is debited and cash account is being credited. So the accounting rule of asset has been applied. Now the second account is basically called as the account of liability. In the account of liability, the account of liability is opposite to that of asset. Any increase in the liability is credit, and any decrease in the liability is debit. For example, we have purchased the furniture for 20,000, but now here we have purchased the furniture for 20,000. That furniture we have purchased for 20,000 on credit, not on cash. So what would be the treatment of this into the T accounts? The treatment of this would be on T accounts would be like that. As our we have purchased the furniture on credit, our liabilities being increasing. So any increase in the liabilities is basically credited. So here our accounts payable will be generated as we have purchased the furniture on credit. So basically we will make two type of T accounts. One would be the furniture account, another would be the account payable account. As we are getting the furniture, and furniture is our asset, any increase in the asset will be debit. So we will write the furniture of the amount 20,000 in the furniture account on the debit side, and the second T account we will make for the accounts payable. And our accounts payable and our liabilities been increasing, as we have not made the cash payment, we have to make the cash payment later on. So our liability has been increasing, so we will write the 20,000 in the account payable on the credit side, as which shows that our liability is being increasing. Now as we make the payment of the account payable with the cash, now in this case when we make the payment of the account payable with cash, our liability is being decreasing, and any decrease in the liability will be debit. So here we will again make two types of account. We pay the liability through cash, so our cash is being decreasing, any decrease in asset will be credit. So in the cash account we will write 20,000 cash on the credit side, and here our liability is also being decreasing as we are making our payment of the account payable. So any decrease in the liability will be recorded on the debit side. So in the accounts payable account we will write 20,000 on the debit side. So it is clear that we have applied in the both examples the rule of liability, that is any increase in the liability will be credit and any decrease in the liability will be debit. So the third account we are having is the owner equity account. In the owner equity account, any increase in the owner equity will always be credit and any decrease in the owner equity will be debit. So the owner equity account basically has the same rule as that of liability. Any increase in the owner equity is credit and any decrease in the owner equity is debit. So let us see this with the help of an example. For example, the owner started the business with 10,000 cash. Now here the owner is starting the business with 10,000 cash. The owner has started the business with 10,000 cash. So whenever the owner is starting the business with cash, the owner has basically deposited the cash into that business, plus the owner has invested the capital into the business as he started the business with his own cash. So here we basically make two type of account, the cash account and the capital account. So as the owner is depositing the cash into the business, so cash or asset cash will be increasing. So any increase in the asset any increase in the asset will be written on the debit side of the account. So we make the first T account for the cash account and we will write 10,000 on the debit side as our cash is being increasing, and the second T account we will make for the capital account as our capital is also increasing. You are investing in that into the business and our owner equity is increasing. So any increase in the owner equity will be written on the credit side. So we will write 10,000 of capital account on the credit side or the right side of the T accounts.